All right, gangsters. Tuesday night. We gave you the day off yesterday. No markets. Today I expect everybody to be focused. Justin Carrington is here from Australia. Good eye, mate. How'd I do? Was that good? Mike, was that good?
Was that like good day?
Good eye,
Good eye?
Mike.
Good eye?
Yeah. Like good day, but it's...
Yeah.
Yeah?
Yeah,
No?
not bad. Not bad.
All right. Garrett Peterson is here. Roger is here. Kelly SF, what's up? Dave Wilson, we see you. Joe Altamoro, Micro GX, Cliff. Everybody's here. So glad you guys are here. Hi, Pam. Hi, Michael Skyros. Okay. Tonight's show is sponsored by our friends at Public and the Public app. Michael, what's going on with Public these days?
I'm still in my treasuries. I was just looking before
Okay.
we hopped on. I mentioned this
Yeah.
last time, or one of the times. But you get, the interest just comes every day. This is what it look like. Just straight up. Up and to the right.
What's bad about that?
Those sweet, delicious 6-month U.S. treasuries.
So one of the big conversations right now amongst all the financial companies that are reporting is how much cash sorting is going on, or how likely it is that their customers will remain in money market funds or treasuries or whatever.
This is the question.
This is the question, and we'll have some opinions to share later on in the show. Thank you so much to public.com / is it / compound or the compound? Okay, public.com / the compound. Make sure you click the link. There's all sorts of disclaimers there as well, and get yourself set up. It's really easy. I use it myself. Okay, we had 9 Bitcoin ETFs come public in one day, or in 2 days. This is kind of a derby. I was making fun of it, like the derby. No, that's what it is. It's like a horse race. 9 horses bolted all at the same time. It's pretty cool.
Nate Garassi called it, or somebody, I think it was Nate, called it the Cointucky Derby.
Yeah, no, I like it. I was like, oh, rolling my eyes, but that's what it is.
Yeah,
It is.
sure.
So we don't hate that. Can you tell me? Let's give our viewers this table really quickly. All right. So what you're looking at here is the ticker. You're looking at the name of the fund itself. You're looking at the issuer, and then its assets under management as of, I guess, yesterday, right? So can you tell me, Mike, confirm for me, Grayscale hasn't lost any of its AUM, even though it's the highest cost issuer on this list. The other funds are now bringing money in, but they're not necessarily taking it from GBTC. Am I reading that right?
That's not true. I think Grayscale lost quite a bit of money. I don't want to throw out an exact number, but it's a lot.
I thought they were at $27 billion last week.
It was more. No, they're losing money. They're losing money.
No, I would assume. I just thought it would. I thought it would happen quicker. It did.
I'm telling you.
It didn't happen overnight.
I'm just going to Balchunas' feed. I mean, I think it was. I don't want to misquote anything, but like $500 million on day one. It was not nothing.
I guess in one day that's a lot.
Yeah, it was
but
not.
It's
nothing.
still all right. But it's still more than 20x the next closest. Like it's still gigantic relative to the field, but it's only been 3 days.
Dude, if you hold GBTC, which was up, how much was it up last year? 400%.
Yeah,
huge, crazy number. If you're holding that in a brokerage account, you're not selling.
No,
you're gonna
because you're gonna pay the taxes.
If it's a taxable account, you're gonna pay the taxes. Listen, the fees are high, but you're not paying those taxes just to get into
fees are high. Right, the fees are high, but they're not as high as a capital gains tax.
They're not capital gains high. So a lot of the money is trapped.
It's a really good point. Okay. The iShares Bitcoin Trust and the Fidelity Wise Origin Bitcoin Fund look to be neck and neck. The former is $500 million. The latter is $427 million. I would imagine that those two can stay neck and neck because both companies are equipped with about the same amount of marketing firepower. So maybe you could make the argument that iShares has an edge in talking to. I don't even think I'd make this argument actually. Like I almost feel like they are talking to an identical type of investor. What do you think?
BlackRock is more BlackRock is more advisor based. Like there's not a there's
Is it? But is it though? Fidelity is the second largest custodian for
yeah,
financial
but,
advisors
but,
in the world.
But regular people are going to fidelity.com. Do-it-yourselfers, most people are not. Retail is not going to iShares.com. That's advisors.
But they run commercials directed at retail investors.
Who does?
iShares TV
Yeah.
commercials.
Yeah.
So I don't know. So all right, here's my opinion.
Anyway, but on
Fidelity-
iShares website, splashed across the homepage, access Bitcoin. Right on the homepage.
Oh yeah.
So what's your
my
take?
take is Fidelity. First of all, Fidelity didn't get bullish on crypto a month ago. The way that Larry Fink and BlackRock pivoted, they put in a filing, and then all of a sudden, all he wanted to talk about was Bitcoin.
Yeah, when did they launch Fidelity Digital Assets? Not
I
yesterday.
don't know, 10 years ago. There were articles in 2017 about Abby Johnson mining Bitcoin in her office.
Mm-hmm.
So you could argue if that's the case, they should be even further along than they are. I think they just play it very cautiously. Fidelity is very conservative. Like they could have done what Grayscale did and launched a trust, but there would have been so much negative publicity from that approach that they probably just figured, you know what? We'll wait till everyone else goes and then we'll just outspend them. And they have direct access to more individual investors than anybody on this list. Mm-hmm. So I think that they're going to stay neck and neck with BlackRock for a while. That's just my guess.
I agree with that. Do you think so? Ben was underwhelmed by the $1.4 billion that they took in. I think that's a lot of money. What's that?
Yeah, I was going to say I have no patience though, as you know.
What did you just say? Did you say baby? What was that?
I'm like a baby. Like if it's not $10 billion on the first day, it's to me. It's like I don't even want to talk about it. I think that I expected much more. I've told you I thought this would be this like massive price catalyst, and it's been 3 days, so it's a little bit childish. But like $1 billion is not a lot of money. I mean, it really isn't for 10 ETFs. It's just not a lot of money.
You thought the ETF would be a big catalyst on day one for price?
Yeah, because I thought not just money coming into the ETF, but people front running the money coming into the ETF. I just thought.
But they did. They did at the end of October.
They did already.
At the end of October, Bitcoin was at 30,000, and now it's at 44.
Yeah.
It's a huge move.
No, you're right. You're right. What do you think these look like at the end of the week?
The numbers?
Do any of them break $1 billion this week?
Yeah.
You think so?
Yeah.
Okay. Bitwise, 225 million. Kathy Wood, ARC, 21 shares, Bitcoin ETF, 111 million. Our friend Jan Van Eck has a horse in the race. Van Eck Bitcoin Trust, 82 million.
Best ticker. Hodl.
Franklin Bitcoin, also, I mean, we're friends with everybody on this list. We almost can't choose favorites. This is Franklin Templeton, right?
Yep.
Okay. Franklin Bitcoin ETF, 50 million. Invesco Galaxy Bitcoin. What they teamed up with Novogratz?
Yes.
Okay, 23 million. Wisdom Tree, also a friend of ours. Wisdom Tree Bitcoin Fund, 3 million. And Valkyrie Bitcoin ETF. We don't know these people, do we?
I don't know them.
Valkyrie? No? Okay. 1 million. All right, so those are the products. And yeah, I mean, I guess they'll keep attracting capital. If Bitcoin runs to like 75,000, every one of these firms will like 10x. that would be my guess. The question is, can the flows alone push the price up to 65 or 75,000?
Yes.
I don't feel strongly in either direction. Tell me why.
But I think that if this thing were to run stupidly, and I'm not saying it will, but I think that actually you'll have more retail money coming in. But these ETFs were for advisors, and advisors are less likely to chase a parabolic move, I would think. Until
they start hearing from their clients that they're in Bitcoin ETFs and making all this money, and why aren't you like incorporating this into my portfolio?
I don't know about that.
It hasn't happened yet. I'm just saying it's a thing that could happen.
Could.
I mean, I would guess that sentiment will follow price in this asset class like every other. So, I don't know. Just my take. I think there's no reason to think that investors aren't going to be yelling at their advisors for missing this, because they do it all the time. So,
yeah, I don't know. We'll see. Anything else to say here?
we have Matt Hogan on the audio podcast tonight. So for those of you who want to hear the inside take on the crypto derby, that is right from the horse's mouth. And Matt is the CIO at Bitwise, and he's been very involved in getting these things launched. So if you want to listen to us later, you'll enjoy that conversation. Okay,
Matt
what was in the Barron's-
Matt is the most coherent, sane,
it's great.
rational voice in crypto, in my opinion, or at least right near the top of the list.
He almost doesn't even belong in the asset class. Like, there's nothing crypto about him, which is nice.
Yeah. Yeah. That was a great conversation. All right. I want to talk about the Barron's Roundtable. And why do we always talk about this? I think we all know what's obvious is that, listen, like nobody's recommending that you make changes to your portfolio based on what these people are saying. Nobody can see the future. But nevertheless, it's interesting to see what people think today. So that's the value that I get out of reading it. It's nice to see where people that are controlling real pools of money are. And as usual, there isn't at the Barron's Roundtable. There's a lot of, this is going to be a stock picker's market talk. Like that's, it's always that way. But I picked out 4 blocks that I wanted to riff on. So this was the consensus. This is from David Garreau. He's the chief investment officer of T. Rowe Price. He said, we are probably not going to have a recession in 2024. Interest rates, what's that?
Good.
Interest rates will likely come down, but stocks are expensive. There's no margin of safety. The macroeconomic consensus has to be right to support stocks here. I would agree with that. I agree with Bill that it will be a minus or plus 5% kind of year. That was basically the consensus among the roundtable, if I had to sum it up. So there's not a lot of euphoria, at least out of these people. Nothing resembling euphoria.
Barron's used to have much more colorful people on this roundtable. Like, they used to have Bill Gross on this thing. And I don't remember like all of the names, but they used to have like much more colorful characters who would never be talking about plus minus 5%. So just an observation.
Gabelli's always here. He was on here again. Son Al-Desai said, given the massive bond and equity market rallies at year end, financial conditions take us back to when the Fed funds rate was 1.75%.
Wow.
The market has eased for the Fed. So maybe because the market has done so much of the heavy lifting and easing already, maybe we don't get the 6 rate cuts that are priced in or whatever it is. That would not be bullish.
No, you're going to have to get some rate cuts, or they're going to start saying that we're too tight. They're going to start saying that rates are a drag on productivity and potential GDP, and we're underperforming what trend. That they can't hold those rate cuts back all year. They could probably do it for the first 6 months though.
If I had to know one variable from the future, 12 months from now, I'd be like, tell me where rates are now, and a Fed funds rate. But we could be at 3% because we're just being less restrictive, or we could be at 3% because there's an emergency rate cut. Obviously, I hope the former, not the latter, right? So even knowing where rates are wouldn't necessarily give you that
Was
much
anyone
information.
in the round table like far out of consensus on rate cuts this year? Was anyone like no cuts or hikes?
Yeah, there was one person who's like, you guys are smoking crack. Like, there's no way. I'm paraphrasing. I don't think they actually said that.
Who was it? Was it Barry Ritholtz? Who was it?
Here's another one. Lisa Su, the CEO, I forget who said this. I forgot to give them credit. The CEO of AMD is talking about a $400 billion accelerator GPU market by 2027. That is a massive ramp from $45 billion today, where NVIDIA's data center revenue sits. It implies more than $1 trillion of data center and cloud AI spending by 2027. And I think if this actually happens, then this is more important than any macroeconomic headwinds or tailwinds.
Well, can I say one thing? It was last year. We did not have an economy last year that would otherwise justify a 50% run in the NASDAQ.
And you did
So-
not have earnings growth x these gigantic tech stocks. Earnings were
Correct.
flat last
So-
year. If you take these out, it was much worse.
So if you have that kind of earnings growth from the largest market cap weights in the market, it could be yet another year where the fundamentals of very large companies becomes much more important to the headline earnings than blah, 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 macro, blah, blah, blah. So that's what happened last year. I mean, I suppose it could happen this year. If it does, there are a lot of stocks that are still too cheap relative to what that would imply. And, yeah, I mean, look, the most out of consensus thing you could say is that the NASDAQ crushes the S&P this year. Like, nobody thinks it can happen again to the extent that it just did. It totally could.
Totally could. Totally could.
Yeah.
Here's one more. You always have these. I mean, this is just because, of course, somebody had to say this. Monetary policy has been highly contractionary, but our chronic fiscal deficit is a disaster. It was $1.54 trillion last year, but will rise to an estimated $1.57 trillion this year and $1.76 trillion next year. The deficit is running at about 6% of GDP, which is unsustainable. The national debt is now $34 trillion, or about 1.23 times GDP. We are on a perilous course. Now, I'm not saying this person is wrong. I'm just saying that this is always in there. Always.
Okay. If you please, sir, who said this? This is a fixed income person for sure, right?
It's got to be.
Yeah. You don't
Speaking
know
of
who
that,
it was?
Gunlock hit the headlines this afternoon. 75% chance of a recession. Stocks are too expensive.
I mean, sure.
Yeah, I'll find out who said this.
There's always a chance. All right,
Let's see.
hold on. I'm going to tell you who said it. Watch how good I am at this. This is going to be a fixed income manager for sure.
For
You know what I'm
sure.
searching for? Monetary policy. Okay, it's Scott Black. He's been on this thing forever. You know who he is? Delphi Management. Scott's good. All right.
Not a bond guy.
No, not a bond guy. All right. Financials reported last week. We don't have to rehash the banks, but let's get into Goldman and Morgan. Goldman Sachs, Morgan Stanley were this morning, and then Schwab is tomorrow. Let's start with Goldman Sachs. Like on the surface, it's a great rebound after it's a horrible year, and it was not a good quarter either, but it was like definitive progress for David Solomon's efforts to clean this mess up. And he didn't make most of the mess.
The theme of the call was they kept saying, we're narrowing
Under the sea.
What?
What was the theme?
We're narrow. Yeah. What is this, bat mitzvah? We're narrowing our strategic focus.
Okay, good. Good
That was
idea.
that.
We know that.
So they
I think they're
got
already
rid
getting
of
credit for that
Green
in the
Sky
stock
and
price.
the loan book at Marcus, and they're refocusing on what they're good at.
They got out of this General Motors credit card deal they had. They got out of the Apple deal. Looks like Apple got rid of them, but either way.
Did you listen to the earnings call?
No.
Mike
I read
Mayo
about it.
Mike Mayo is such a ball buster on these calls. I love it.
Yeah, he's great.
Like he's
so
not a ball
funny.
buster. He asks tough questions.
He has buy ratings on all of them, so he could break a little balls. It's okay. They don't get mad at him because he's just been around forever. You know what I mean? He predates all of the CEOs, and when they're gone, he'll still be there asking questions. So you know what I mean? It's like, what do you want to like? Complaining about Mike Mayo is like complaining about the weather. Like, what are you gonna do about it? Let me share a couple of things with you that Sean and I pulled out. So first, revenue came in at $11.3 billion, up 7%. That beat the $10.8 billion expected. Earnings were $5.48 versus $3.51 expected. There's some messiness here, but basically earnings $2 billion for the quarter, up 51% year over year. They had 8 straight quarters of earnings declines, and then they finally were able to beat on the number. Investment banking revenue is still down. It's down 12% year over year. Trading is still down. It's down 3%. Those businesses come back after the market comes back. So that should be this year. That's how that works.
Somebody asked
So,
a question about activity following the stock market. And he was like, Yeah, basically.
Well, that's always been my point. Like, why own Goldman Sachs? Just buy the NASDAQ. There's no way Goldman's going up if the market just went down.
Stock looks good.
I mean, the stock looks good right now. Yeah.
Stock looks good. It had a monster run. It's at like prior resistance, and it's not giving anything back. It's trading well.
They're not hiring people, which after most years like 2023, you would see these banks loading up on new employees to capitalize. They learned their lesson. Headcount is down 1%. The quarter strength came from asset and wealth management, which is a smaller part of their business than it is for Morgan Stanley, which we're going to talk about in a second. But revenue in that division was up 23%. I'm not exactly sure how they're making that money.
Alts. So they hit. I think they gave a 10-year target. I think it was 10 years of $250 billion or something like that in alternatives, and they hit it. So I think that's where a lot of the money is coming from.
So they're making their money by taking wealth management assets and putting them into their own liquid alt funds or alt funds.
I don't know if they're liquid or not. So 40%.
Liquid or not liquid.
They said 40%. I believe it was 40% of the inflow of the net flows were from their wealth management clients.
Okay, so not fiduciary activity, but nonetheless, clients want alts, advisors want alts. Here's alts. Mm-hmm. Alts pay Goldman a lot of money, much more than 3 basis points on an ETF. So okay, so that's the answer to the riddle, because no one else had news like that. And let's get into Morgan Stanley now. Or do we want to pop a couple of these slides real quick? Just tell people what this is. Put this up. What's notable about this? I know it's what I just laid out.
I mean, investment banking fees weren't down that much, considering how much activity had slowed. So not terrible.
FIC was better than expected. It's fixed income, commodities, currency. I think that was a bright spot. I don't think it was like great, but I think it was better than expected, which probably helped. All right, next slide. So this is just Goldman Sachs price. This looks like a breakout. I mean, I suppose it could get turned away at 386 is the previous. I don't know. Stock looks good to me. What do you think?
If you zoom out a little bit further back to the end of December, it got turned away here. So yeah, this is the zone. It's holding it. So
okay. All right, and Morgan Stanley. So this is the first quarter that was presided over by Ted Pick, who is the new CEO. James Gorman, who had been there for a very long time, has officially retired. And I guess this quarter is the last of the Gorman era. But Ted Pick was on the conference call. So
they asked a lot about the transition. It's not. I mean, obviously they hope for it to be a seamless transition. James Gorman had done a really good job. They shared a really great chart at the open, 15 years of transformation. And
yeah, let's take a look at this.
So in 2000, from 2009 to 2014, Morgan was really sort of like Goldman. It was an investment bank. That's what they were known for, with a wealth management arm. And now it's almost a wealth management company with an investment banking arm. So 38% or 39% of their profitability came from wealth and investment management. The other 61% was from institutional investment banking. And it's flipped. It's completely flipped over the last 15 years.
So
it's pretty remarkable.
Half the business is wealth management.
So they're now up to $6.6 trillion in assets. They've got a target of $10 trillion, which I don't know why they wouldn't get there. They added $1 trillion in net new assets over the last 3 years alone. Like, really just incredible stuff.
Well, they underperformed on net new assets last quarter, and wealth management revenue was actually flat year over year. Morgan Stanley had to live in the same reality as everyone else in wealth management, which is that 5% yields as a risk-free return are really, really difficult to swim against that tide. And so they had a flat year over year, and that's why the stock got hammered today. So Goldman was able to grow its wealth and asset management division because it's shoveling client assets into higher fee funds. Great, congratulations. It's also growing off a smaller base. Morgan Stanley's wealth business is massive. It's a bigger base, harder to grow, and they had to fight that same tide that we've been talking about. And that's why Morgan Stanley got hammered today and Goldman went up. Would you agree with that?
Yeah, Morgan Stanley. So they're targeting 30% margins on their wealth management business, and it's half their business, more than half their business actually.
Problem is they didn't hit it. They missed that 30% number,
by a lot.
and the
It was
market didn't like it.
By a lot, it was like 24% or so, and a lot of it was due to, as you mentioned, cash. So they said 22 to 23% of their client accounts are in cash or cash equivalents, and that is not a high margin business for them.
Dude, I can't believe that number. They're saying a quarter of their clients' money is in cash.
It's wild.
Like how? How?
Think about how big Morgan
Is
Stanley is.
anyone
That's like,
advising these people?
that's like $1.5 trillion in cash and cash equivalents. That's a lot. That's a lot of money.
It's too. Unless you tell me the average age of their client is 75 years old, which I don't think it is. It seems like something. There's not enough advice. If you're doing wealth management, you're supposed to be giving advice.
Seems excessive.
It seems excessive if the sum total of all of your advice that you're giving all of these clients is a quarter of their assets are in cash. You might want to change the way you're delivering that advice.
The stock got hammered today, down 4%. And the stock, I mean, it's a no man's land. It doesn't look terrible. It doesn't look good.
Yeah. Oh, the other thing, you wonder why they have so much in cash. Look what the chief strategist has been going around saying. Mike Wilson. So you got this confluence events. You got a risk-free rate that's 5%. You got a chief strategist of the firm basically guaranteeing recessions and bear markets. I don't think he is anymore, but that's what has been going on. And I don't know. Maybe they made some acquisitions where there were a lot of cash laden accounts that weren't being advised, and maybe that's what I don't know. It seems very high. Okay. Is there anything else worth saying on Morgan?
Mm-mm.
Okay. Schwab is tomorrow.
I own
if you're
it.
listening to this Wednesday, you already have the number. You own the stock?
I do.
Okay. Expectation is 67 cents in earnings per share, which would be a decline year over year of 38%. $4.5 billion in quarterly revenue, which would be down 18%. Schwab has seen 2 straight quarters of year-over-year gross profit decline. However, revenue was marginally up those 2 quarters, so margins have come down 2 quarters in a row. It's up because so much of Schwab's business is cash management, and if yields go up, if rates go up, they just make more money. They have a higher revenue line, not necessarily higher profits. Am I reading that right?
Yeah, but they got destroyed because money was coming out of and actually going into money market funds, and that destroys them because otherwise they kept all of that margin. So
that's right.
I listen. Could the stock fall 10% tomorrow? Yeah, why not? If it does, I'll buy more. But you got to think that like all of what we just said is very well known. It's not going to shock anybody. So
can we put this chart up? Does this qualify as higher lows? Is there anything here?
This is no, I don't think so.
There's nothing here, right?
No.
Okay. I'm not in this trade. I've been in it since last spring, I think once. Made a little bit of money very quickly, but I don't know. It's for me. It's just too hard right now. I think it's one of the best financial companies in America. I just don't know that I feel that way about its stock right now.
Fair.
I still think we're in a tough environment. So
Fair.
But we hope for the best.
But you
for
know what?
Schwab shareholders.
I am counting on the fact that the market is going to look past this because that's what it does, right?
Okay.
Tough times are here.
Where would you take a profit in this?
Like 80 in the 80 area.
Let's say they come out tomorrow. They manage to beat fairly low expectations. They announce like a huge buyback and say something exciting, and the stock gaps up 12%. Would you just take it?
No.
You wouldn't take it?
No.
Okay.
No.
Okay, it's commendable of you, sir.
Not looking for 12% here. Okay. Torsten Slot does like a daily chart newsletter type thing, and there's one this week that was really noteworthy, at least to me it was. The outlook for 10-year rates. So they're showing a chart of the standard deviation of private sector forecasters for 10-year interest rates. And at least going back to the beginning of 2019, there's no consensus. There's actually wild disagreement among forecasters, which I thought was noteworthy.
I don't understand the chart.
It's
why
showing
is
the
standard
standard
deviation the y-axis?
What's that?
Oh, because there's all right. I get it now. This is the standard deviation of private sector forecasters' 10-year interest rate forecasts. So this is how far the actual has been from the forecast?
No, this is comparing forecasters to each other. And they're showing, like, if there was like a dot plot or something, there's wild
so the disagreement is going up.
Exactly.
Okay, I got it. Why do you think that is? Just because of how volatile rates have been in general? Does that create more disagreement within the consensus?
I was surprised because I thought that the consensus was for lower Fed funds rate. Now, maybe the disagreement is how far ahead the 10-year has gotten in front of that. So, like, the 10-year is already down to 4.05%.
Right.
And the Fed funds rate are what, 5 to 5.25%? So the 10-year is well ahead of that. So there's probably people that think it's appropriate or on the way down, or no. Even if the Fed does take rates from 5.25 to 400, why should the 10-year not trade at a premium to that?
No, I was saying the 10-year is ahead of the 2-year on the way lower.
Correct.
Yields on the way lower.
So the 10-year already priced in all those cuts.
It's pretty incredible, and it did it fast. I think it started like mid-November and knocked out the whole thing in like 6 weeks.
Really fast.
So that's pretty incredible. All right, what are we doing next? Is it me? Oh,
yeah.
I was looking at. I've done a couple of screens over the weekend. The weather's not great, and I'm just. Oh, who do we have at the door? Hang on a second. Oh, look at this, Sean Russo, ladies and gentlemen, from the research squad at Ritholtz Wealth Management, Sean Russo. Sean, you can't hear them, but they're all applauding. I was looking at some of the worst performing stocks, and I thought, what are like the most despised names in the NASDAQ? And what's my metric for despised? I didn't want to look at analyst ratings.
Wait, hang on, Josh. I'm sorry to interrupt. However, this is the first time I believe that our audience is seeing Sean Russo. So maybe an introduction is in order.
Sean Russo from the research squad at Ritholtz. More?
A little bit.
What can we tell people? What can we tell people about you?
We could tell them that his mic's not working.
Mic is off.
Duncan. Sean joined us 2 years ago. It's been an absolute godsend. Made our lives a lot easier. Helps us with everything that we come up with for the show, for the company, research-wise, portfolio-wise. He's been just a godsend. So we love you, Sean.
All right,
Sean, you muted your mic on the mic. Touch the unmute button on the mic.
What a noob whale. There we go.
There's no way I did that.
There we go.
You did do it.
I've
you
done
got so excited
times.
you muted yourself.
Welcome
They're roasting you in the comments right now.
Give it to me.
Amateur, rookie, Sean gets an L.
I deserve it.
So Sean, what did you put together
to the show,
tonight for us?
So I basically just screened the 20 worst performing, actually the 20 stocks in the NASDAQ that are off the most from highs.
And the NASDAQ 100.
Off from their own highs.
All-time highs, yeah.
Okay. And most of these highs were set in 2021?
Yeah, for the most part, yeah.
Okay. Let's throw this up on the screen. What do we have here? So that thick black line after Atlassian Corp is basically the dividing line. Those top 8 are the Hateful Eight. These are the most hated of the NASDAQ. Let's call them tech, biotech, communications, PayPal's financial services, but we're including it.
Exactly.
I want to run these down very quickly. SiriusXM is the worst. Ugh. It is 92% below its all-time high. That's incredible. PayPal is not much better. 80% drawdown. Moderna 79. Illumina 75. Warner Brothers Discovery 62. DoorDash 60. Charter Communications down 55%. And Atlassian, which most people call Team, the ticker is Team, is down 50%. So that's where we divided the list. And the general idea is, Mike, do we run this as a draft? Or you can just take any 4 you want, regardless of whether or not I take it?
Yeah, you know what? I didn't realize that we were restricted to 8. I used the whole list, but that's fine. Listen, I'm a pro. I could audible on the fly. Let's do it. I'll go first.
I think it's your best 4 equal weighted versus my best 4, and they could be the same, right? We're okay with that.
Yeah, that's fine.
Not all 4 the same, but All right. Why don't you draft first? What do you got? What do you want to take?
Are we gonna do one at a time, or do you want
I
to
don't
just
know.
do?
Give me 4.
All right. So I own 2 of these pieces of shit. So I'll start there.
I only own 1.
I own PayPal and
Okay.
Moderna, and I saw the news on PayPal today. I just don't know that this is new news. Like everyone knows that Apple is destroying them. Is that
Oh,
reason
you
enough?
saw
to,
the downgrade from my guy, from Dan Dolev.
yeah. Is that reason enough to own the stock? Listen, I would have much preferred it to be up on a downgrade, but it wasn't. It actually did sell off with pretty decent volume. So I'm not gonna stick around for much longer if this thing continues this downtrend.
But it's on your list?
But it's on my list.
It's
on my
so
list.
Okay.
cheap. It's like literally the cheapest it's ever been. It's like
For
9x
good reason.
forward earnings.
For good reason. Apple is destroying them.
It's pricing in no growth ever.
There should be a buyer, I feel like, at some point. Like, I use Venmo probably every week. So it's not like completely useless.
How much do you think you pay PayPal every time you use Venmo? What
I
percentage?
honestly have no idea, but I don't
Okay,
even
it's
look.
zero.
It's-
Zero.
This is the
Okay.
problem.
Yeah.
One of the things Dan wrote. Dan's an analyst covering fintech for Nomura, and one of the problems he lists is after all this time and all this usage, they still haven't figured out a monetization strategy for Venmo. One thing they were thinking about doing was making it so that when you use Venmo at checkout in e-commerce, the vendor pays Venmo for the privilege of accepting Venmo as a payment form. But I don't know if that ever really turned into anything. So I agree. It's cheap, but it's cheap for a reason. I agree.
It's cheap
with-
for a
with both you
reason.
guys.
Listen, it's dangerous to say, oh, it's down 80%. How much? No, it could go all the way down. Right?
Yeah, it definitely could.
It's still a $60 billion market cap. So there's I'm not saying that there's a high ceiling or high floor in the stock. Who the hell knows?
All right. You got another one?
Number 2 is Moderna. And
Okay.
I have no, what's that?
Why?
I have no fundamental thesis here whatsoever, other than the
Well,
fact that
I'm in.
it stopped going down. That's it.
Okay.
That's it.
You think we've seen the worst that we'll see there?
I mean, I own the stock.
If the
So-
pharmaceuticals are starting to act better relative to the market, which they are, then I feel like that gives Moderna at least like a nice foundation for the selling to stop. I don't know, Sean. What aren't we considering with that one? mRNA.
I mean, just on an earnings basis, it's damn near as cheap as the S&P 500. So I feel like if they get one good drug or like one good catalyst in the stock, it's going to be a rocket ship because that's not priced in.
Ooh, a rocket ship. I like that.
Similar to PayPal, I guess. Like nobody is expecting anything, anything positive out of that name.
Yeah.
All right, you got 2 more?
Yeah, DoorDash looks really, really healthy, just technically, but I hate this company. I just think it's just beyond
No, but
egregious.
that stock's going up, dude.
I know it looks good. I can't in good conscience recommend it though. Warner Brothers, I think there's nothing there. I don't think there's anybody coming to save them. Team looks decent, so I'm going to go with that.
Okay.
Stock looks good there, and then Siri is out. Absolutely no way. So just by process of elimination. Oh, but
Why?
Charles-
Wait. Why is Siri uninvestable? It's a $5 stock. You actually pay for it.
I do pay
You're a
for it, but
customer.
it's been a piece of garbage forever.
Agreed.
There's no reason to think the thesis is changing here. The company stinks. The chart stinks. Absolutely not. You know what?
Product stinks.
Is it? What is? But what is?
I
What is
hate
the
the new
problem?
app.
What is the problem? The problem is that Howard Stern is in his 70s and not funny anymore.
So
And
listen,
they
I
have
love
nothing to back it up.
I
Afterwards.
love Howard. I am a lifelong fan since I was a little boy, and I don't listen anymore.
That's right. I don't listen anymore.
Nobody's paying for that product. There's just too many other options. All right, you know what? Regrettably, I have to go with DoorDash. I have no other options. So DoorDash, DoorDash, PayPal, Moderna, and Team.
Can I make a DoorDash comment?
Please.
Like, I don't understand why anybody would use DoorDash over Uber Eats.
Nobody would. You'd have
It's
to.
all,
you'd have
DoorDash
to
is
be
already
a-
embedded within Uber Eats. So why?
You'd have to be some kind of Amish where somebody handed you a phone for the first time and you liked the logo of one over the other. There'd be no There'd be absolutely no reason that anyone would ever use DoorDash versus Uber. There's no pricing difference, and Uber is just you use it for other things in your life.
Josh,
I'm biased.
Before
I'm biased.
we get to your 4, what was your thoughts on Uber shutting down Drizzly? They
Brilliant.
paid $1 billion for it.
Doesn't
2-3
matter.
years ago.
You know what they did by buying it? They boxed out anyone else from even attempting. And it's not that they're going to stop delivering alcohol. They're going to move over all of those customers into the Uber app.
Yeah.
The Uber app is the everything app. There's no reason why alcohol should be separate. So they learned the business by buying it. Now they discard the shell and they sucked all the meat out of it. It's like a crab leg. Toss it out the window.
All right, what's your
I'm done
4?
with you now. All right. I think I agree with a lot of what your comments were, but not all of them. I'm gonna go Warner Brothers. There is just no way this full year goes by and nothing happens on the M&A front.
There's a way.
A worst case scenario is they do something strategically dumb that the equity can't recover from, which I agree is a risk. I don't think it's status quo. Also, keep in mind, House of Dragons Season 2 is coming back this year. True Detective debuted on Sunday night.
Which was
Dude,
sick.
Barbie. Forget about that. Barbie couldn't save him. Come on.
All of their hits. People don't necessarily subscribe to an app for a movie, for a TV show that everyone's talking about every week. That's a different story.
That's true.
All of their hits are coming back this year.
That's true. Did you watch?
Underrated the power of that.
You're right. Did you watch True Detective yet? I'm watching it tonight.
Of course I did.
Amazing.
I watched it live and then went back to the football game after.
Was it amazing?
I just love it.
I can't wait.
I just love it. I
love it
just
too.
love the vibes. I love
love
Jodie
it.
Foster.
The vibes.
I'm so excited. You watch it, Sean?
Yeah, the vibes are killer.
The vibes are so haunted.
Yeah.
Oh my God, it's gonna be
Just
so good this
ominous.
season.
All right, number 2.
So that's my number 1. My number 2, I'm gonna take Sirius because it's a $5 stock. No other reason.
And okay. All right. Good
don't know.
enough. Good enough.
Here's why. If nothing fundamentally gets better, the stock could still go to 7 just by accident.
Sure. Okay.
Okay. I'm going to take PayPal. They have a new CEO. It's priced for 0 growth. The Apple news, everyone knows that Apple Pay is killing them in the shopping cart. If they come up with something to do that's better than what they've been doing at any point this year, the stock could be 70 in a blink. So I don't think it's going back to the glory days. I just think I'm paying very little relative to what the potential is. So those are my 3. And then I'm going to do Illumina, which makes equipment for the life sciences industry. And it's just been a controversial stock. Carl Icahn has been involved in this. It's been absolutely destroyed. But it should rebound with the healthcare sector and with the pharma stocks. It should trade somewhat in line with them. Moderna might be the better pick, but I'm going Illumina
Yeah, looks okay.
because I don't trust the Frenchman who runs Moderna. I don't like the cut of his jib. So that's where I am. Sean, have you recorded mentally our 4 choices?
Yes, got it written down.
And we will be tracking the Hateful Eight throughout the course of the year?
Yep.
Will there be good-natured ribbing?
I'll try my best. Or Michael fires me.
Hey, you did a really great job on the show. Thank you so much for popping in to join us. We'll let you rock and roll. I know I'm going to see you tomorrow, right?
Yep.
Yes?
Me too.
All right.
Yes, sir.
Good job, Sean.
All right. I'll see you in NYC tomorrow. All right. That's Sean Russo, ladies and gentlemen. We have anything
right.
left? We have one more.
Yeah, we got one more. Josh, last week you came to lunch and you were telling us about Bryn Talkington's new Ray-Ban Facebook sunglasses, and I was really excited
I
about
have
what
more
you
on
were,
this, by the way.
I was really
Yeah.
excited about what you were saying. Do you want to go ahead?
I went to I was in Hudson Yards yesterday.
Yeah.
They have a giant is it a Sunglass Hut or a Ray-Ban store?
Sunglass Hut,
Might
probably.
have been I don't
think
know.
Ray-Ban
Might have
has
been a Ray-Ban
stores.
store. Might have been a Ray-Ban store. Anyway, they have it's not just Wayfarers. They have like 5 different models of Ray-Bans with
really?
the Meta technology. And I was playing with them in the store. I was trying them all on. I think this is going to be even bigger than I thought last week. everybody in the store was trying these things on.
Yeah.
I really think these are going to go.
Okay. My dad, so hardware AI virtual reality is coming in a big way, and I feel like we're not making a big enough deal about it. My dad called me and he was telling me that he got the Oculus. So my dad is retired and he was like, do you know about these things? And he was just,
Wait, what?
yeah,
What made him do? Is he a video game guy?
no.
What
And
got
he-
him to buy? Where did he buy it?
Dude, I have no idea.
on.
He was blown away. He was raving about it. I'm like, no, I know. Raving.
Wait, like he ordered it? I'm fascinated by this. Like he bought it on the internet. He saw an ad for it, clicked it, and bought it.
He must have.
What does it do right out of the box?
I don't know. I've never tried one on. But he's
Okay.
telling me that he's like, I was on the mountains in Peru and I was here and just raving about it. So,
Okay.
there was, before we get to the Vision Pro, there was,
Batnick Dad Index. Roger Weatherford said things your dad is into. We're gonna put them all in a.
did
in
you
a list.
see any of the demo of the video that I sent to you and Ben from that company? Packy was tweeting about this. Rabbit, the R1,
Yeah.
it's kind of cool. And
Is
whether
that a
or not
wearable or is it like a device? Though?
it's a
I
tiny
can't
little
figure
thing
out
that goes in
what
your
that is.
pocket. So
Okay.
what this thing does, the R1, they already sold 40,000 units. What it does is it basically brings it brings the AI to life. So when you're typing to ChatGPT, there's no action. So you could do that. You could order the Uber through this thing. You could buy plane tickets. You could tell it to book a flight, book a trip. You're trying to do this, and then actually execute it through the hardware. It's pretty neat. So whether or not this is the one, it's not even relevant. The point is this category is going to be gigantic, and it's going to be maybe a dud out of the gates. So for example, the Vision Pro is getting some really, really gnarly reviews. This thing hits the market on February 2nd, and there's a demo. Let me just read from Bloomberg's article. The demo begins with the retail worker scanning the user's face with an app in a similar fashion to setting up Face ID. This scan will tell the employee hosting the demo which light, seal, foam, cushion, and band size the customer will need. The light seal, which keeps outside light from leaking in, comes in more than 25 shapes and sizes. The cushions come in 2 sizes. If a person is wearing glasses, the store will have a device to scan the lenses it's a whole thing. It takes 25 minutes just for the demo and the setup. And Mark Gurman, who covers Apple for Bloomberg, said the Vision Pro virtual keyboard is a complete write-off, at least in 1.0. You have to poke each key one finger at a time like you did before you learned how to type. There is no magical in-air typing. You can also look at a character and pinch. You're going to want a Bluetooth keyboard. So I think that the first version of this thing is going to get destroyed by critics. Now, that being said, I cannot wait for version 2, 3, 4. I still think that even though it's going to stumble
I
out of the
agree
gate,
with
it's going to be a monster category. It's going to be magic.
We had that
when they figure it
conversation with
out.
Dan Ives. We already know what the headlines are going to be.
But
Like
it sounds
the-
bad. It does sound bad.
Yeah, I'm sure because they're putting something out that's they're not inventing the category. They're inventing it from the Apple perspective. And the version 1 of all of their shit was silly. The first iPod wasn't like a monster hit right out of the gates. People looked at it and said, that's the stupidest thing I've ever seen. It only holds 50 songs.
I think
Like,
the difference
you have to have
is
an imagination.
you're right. I agree. The difference is that now Apple is Apple, and people's expectations need to be recalibrated because it's not going to
that's
be.
true.
It's not going to be what the iPhone is today. Right out of the gates, it's just not.
That's true. Look, I'm not buying the first one of this. I'm not the person that buys really the first one of anything. By the 5th one, we can't live without it. How many times?
I can't wait.
How many
I can't
times
wait.
has that played out?
I can't wait.
So
yeah,
I'm 100% on the same page with you. I have a feeling we're going to be talking about this stuff all year.
lot,
Okay, you're
yeah.
up. You're going to make the case.
Okay, I want to talk about AMD and technicals, and that's it. I don't want to even talk fundamentals. But John, let's go to the chart on. This is a stock that I own, and I'm not trying to pat myself on the back. I'm just trying to teach a lesson, if I may, to people that are buying individual stocks.
Never doubt Michael when he's getting wrong a
That's not
name.
what I'm saying. That's not what I'm saying. Dude, I own plenty of pieces of garbage, as I already mentioned. So, Josh, I was with you on this day. This was December 7th. AMD was up 10% on the day. And I said to you, what did I say to you?
About AMD or just in
I said, I'm
general?
buying more. I'm buying more
Yeah,
today.
you did.
I said, listen, this is the professional move. The stock is up 10% on the
hardest trade to make.
The stock is up 10% on the day, and I'm buying more. And this is a move that I never would have made in my yesteryears, but I've learned a thing or two, and it doesn't always work out. But next chart, please, John. AMD is up 25% since that 10% up day. So this is not a victory lap. I'm just saying.
No.
That,
The lesson is so important that
Yes.
you're giving people is that when you see that much strength in a stock, it doesn't automatically means that you're seeing the end of the move. Like a lot of times,
the beginning of a new one.
Yeah, a lot of times, like a huge burst of buying is just a precursor, and it's actually rare. It's actually rare that a stock will crash to a new low from a new high. That's not what usually happens.
Doesn't work that way.
So, but it's hard.
It's really hard.
It's really hard to own something, and then it's up 20%, and you sit there and look at it and like, well, why are all these other people buying it? Like maybe I need to own more of it than I own, but then I'm going to raise my average cost.
It's 10 times easier to take profits than to buy more. When buying more is usually the right move. So that's the lesson.
Okay, I don't hate that lesson. It doesn't always work.
Doesn't always work, of course. Nothing does.
Nothing always. Just because something doesn't always work doesn't mean there's no value to understanding it. Okay, I have a mystery chart for you. Slightly off the beaten path, but I'm not going to make it that hard for you.
Okay.
John, if you please.
What in the hell is this? Dude, what the hell is this?
Bear with me.
I mean, what is this? All right, go ahead.
The clue is in the price, and I'm going to give you two more. Clue number 2. It's not a stock.
No kidding. It's not a stock. What is this? What's this?
It's not a
Economic
stock.
data? Hold on.
Sort of.
Go ahead. One more time.
Okay.
No, there's
Look at
another
the
chart.
price.
There's another chart there.
Give me the other chart. Okay. Look at the
Oh,
price.
I know what this is. I do know what this is.
Okay.
I think I know what this is.
I only gave you 2 clues.
Is this natural gas?
No, sadly no. One more clue. It's something we really haven't had to talk about for a long time because it just has not shown up at the party.
It's not the VIX.
It is the VIX. Look
It's
at you.
It's a horrible
Look at
looking
you.
chart.
Round of applause.
All right.
So here's how I bring this up. You see this spike from the first week of the year, chop back on. See this spike from the first week of the year?
Yeah, spike.
That's above the prior high. And I know we don't really do this with
Dude,
VIX,
it's spiked
but
to
fine.
13. Go ahead.
No, but my point is, it's like we might have seen the VIX low during the last week of the year, and or during the Christmas week, and now it just might be back in the conversation. The
Yeah, I'd
lack
buy
of
that.
volatility.
I'd buy that.
I want to go to this next chart. This is the VIX versus the 10-year Treasury note yield.
Okay.
So you see that these VIX spikes are being accompanied with spikes in the yield on the 10-year.
Yeah.
So bear is paying attention to. That's all.
Absolutely.
That's all I'll say. If we keep
Listen.
getting slightly hot economic data and that 10-year keeps perking up, you're going to see the VIX back in the game. That's all I'm going to tell you.
We had an incredible November, December run for the stock market.
Yeah.
It would not surprise me at all if we
Bear
tread
killer.
water, chop it up, go nowhere, digest. In fact, it would surprise me if we kept going higher, frankly. So nothing out of the ordinary if we give a little bit back and we get a little bit of spike.
Here's my point. If we're like a VIX 15, 16 and not 12, 13, in that environment, you don't just keep adding new stocks to the portfolio. It's just because you're not getting rewarded the next day after you bought it. That's how things have been for the last couple of. You buy something, you're up relatively quickly after. But that's in a VIX 11, 12, 13 regime. If that changes and you're back in that 15, 16 neighborhood where everyone thinks you're about to hit 20 again, you don't just keep looking for new stocks.
Josh,
just
you made such a great analogy with Joe and JC about the professional fishermen, professional traders. They know that there's a season for everything. There's a time to fish and there's a time to avoid the waters.
That's right. So it bears watching. I'm watching that 10-year yield. The 10-year yield is the most important exhibition in terms of like how people are feeling about the higher for longer inflation shit. And if that starts to change, I think stock volatility is going to change right along with it. And I don't see any real way around it. So just wanted to spotlight that. But you did guess it with 2 clues, which is not bad considering how weird their chart was. So
I mean, that's a
congratulations.
weird chart.
I don't know what Michael's won. We'll find out after what his prize is. But I want to let you guys know, hey, everybody, tomorrow is Wednesday. My favorite podcast is back. All new Animal Spirits with Michael and Ben on Thursday. An all new edition of Ask the Compound. If you want to get Ben your questions, there's an email that you can use to submit those questions. Duncan, is it still the same email? Do we know?
Yes.
What is it?
Yes, it is. And what is it? AskTheCompoundShow@gmail.com?
Yes.
All right. AskTheCompoundShow@gmail.com if you want to be part of that show. And then Friday, an all-new Compound and Friends. Thank you guys so much for watching tonight. We appreciate it. Thanks for all the likes. We will see you soon.